Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. It's Thursday, May 21st, 2026. Stocks ground higher into the close, but it didn't feel easy. The day started tense. Middle East headlines, oil pressure, that familiar inflation worry. Then, crude flipped lower intraday and the market exhaled. Indexes ended green. But here's the catch. Leadership splintered. Nvidia slipped after earnings and the rally had to find new legs elsewhere. On the S&P 500 heatmap, this looked like a stock pricker's board. More green showed up across the smaller boxes, while mega-cap tech looked washed out and indecisive. Healthcare? It stood out as a clean, consistent green pocket across the large names. And the big visual shock? Consumer staples deep red, dominated by Walmart's downdraft that just dragged the whole group down. That heatmap pattern lines up perfectly with the day's money flow. Leadership tilted toward healthcare, plus supportive financials and industrials. On the flip side, consumer staples and energy lagged. The rotation narrative was highly specific. Capital backed away from crowded high multiple AI leadership and leaned right into steadier earnings and cash flow areas. And inside tech? It wasn't an exit. It looked like a reshuffle. Select semis and hardware names stayed bright, even with Nvidia in the red. So the context today was tension, macro headlines versus micro dispersion. Early on, the market had to respect the Iran and oil tape. Higher crude in the morning threatened to bring that inflation fear right back. Then, the tell oil reversed lower, yields cooled, and it gave permission for broader participation. But this wasn't a straight-line rip. The close felt more like a postponement than a resolution. We're still headline sensitive, and increasingly driven by guidance and positioning, stock by stock. As for market chatter today, we didn't get a specific rumor list. But what clearly did influence behavior? The headline-driven narrative around Iran and oil. No verified rumors needed. That's the kind of backdrop that shifts risk posture fast, even when the close looks calm. So treat the next oil move as a sentiment accelerant, not just a footnote. Walmart was the tape's loudest defensive shock. Shares plunged over 7%. The setup was clear. Investors sold off despite a strong quarter, fixating on a conservative outlook and near-term profit guidance. And because Walmart is a staples bellwether, that gap down didn't stay contained. It distorted the usual risk-off red and heavily pressured the broader staples complex. Nvidia was the key leadership referendum today. Shares fell almost 2% after earnings. The framing? A beat, but not a blowout relative to expectations. Lofty valuations and the perfection threshold kept sellers active. And that matters because Nvidia is the AI sentiment barometer. When it can't rally cleanly on earnings, it tells you the market is tightening the must-deliver bar for AI leaders. IBM was the other side of the leadership story, surging over 12%. Market framing focused heavily on AI and quantum initiatives, enough to trigger an aggressive re-rating and short covering. A move like that reads as rotation with teeth. Buyers were absolutely willing to chase legacy enterprise tech, not just the usual mega-cap AI winners. Micron helped explain why today wasn't just a simple AI sell-off. Shares gained over 4%. The driver? AI memory demand and robust pricing power. Put that right next to Nvidia's weakness, and the message is internal semiconductor rotation. Money is just moving around within the complex, not exiting it completely. Qualcomm was another strong semi-pocket, jumping over 5%. Strength was concentrated in select names tied to AI, edge computing, and handset auto narratives. So again, it reinforces the point. Investors were busy differentiating AI beneficiaries today. They weren't just buying the whole complex as one giant trade. Deere was a stark reminder that this was still a mixed tape under the surface. The stock dropped over 5%. We saw a tough earnings mix, profits down year over year, and weak large equipment demand. The market severely punished that forward demand tone. Remember, Deere is a real economy and capex read-through, so traders are going to keep it on the dashboard, even on a green index day. Here's the near-term setup from the calendar. U.S. equity markets are closed Monday, May 25th for Memorial Day, so the next cash open is Tuesday, May 26th at 10 a.m. Eastern. We get consumer confidence. Then, Thursday, May 28th is a massive macro day. Core PCE, preliminary GDP, unemployment claims, and new home sales. On the stock tape, the watch list is pretty clear. Watch Nvidia's post-earnings digestion, watch Walmart for stabilization, and see if Micron and Qualcomm keep leading that selective semiconductor rotation. After that vertical IBM move, it's all about follow-through versus fade, while Deere stays your capex temperature check. Bottom line, we got a green close helped by that intraday oil reversal and some cooling yield pressure. But the market's message was discipline. Leadership is fragmenting, and guidance-driven landmines absolutely still matter. If breadth keeps improving while the old generals hesitate, that's rotation, not collapse, into the next session. Keep one eye on oil headlines and the other on whether today's winners can actually hold their gain. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.